63-year-old retiree Peter Button has a $300,000 mortgage on his home in the northern suburbs of Brisbane. He's with the Commonwealth Bank, his bank of choice for decades. A relationship that's beginning to sour.
I think as the supposed leading bank in Australia to do that, I think it's an absolute disgrace.
The CBA hasn't passed on the Reserve Bank's recent rate cuts in full.
We've been thinking about moving, and as a result of this, I've been doing some investigation online about some of the other online banks around.
It's the perennial whinge from governments of every stripe. The Reserve Bank cuts the official cash rate, the government calls for it to be passed on in full, and the banks ignore it.
They never learn. They honestly never learn.
It was no different earlier this month when the Big Four again snubbed government demands. When the Reserve Bank cut rates by 0.25% 2 weeks ago, ANZ, Commonwealth, NAB and Westpac passed on just over half. This year, the Reserve has cut official rates by 75 basis points, but the Big Four have only passed on an average of 57. In other words, the banks have snaffled a quarter of the benefit. According to the government, this has boosted the big banks' revenue by $500 million and shortchanged anyone with a new mortgage about $500 a year. The government's unleashed the consumer watchdog, asking Rod Sims to investigate whether anti-competitive practices are keeping bank customers from the cheapest mortgages.
It's really potentially the most important financial decision people make. I think you probably can describe the market as being a little bit confusing, and we'd like to basically lift the veil a bit, make that all a bit clearer.
The Competition and Consumer Commission can't force banks to pass on rate cuts. They can only investigate competition issues. But Rod Sims seems to have already identified two potential problems: whether existing bank customers are doing themselves damage through their loyalty, and secondly, whether shopping around is as easy as it sounds.
There's certainly barriers in terms of some of the processes you have to go through, switching from one bank to the other.
It actually is very easy indeed. There are 6 comparator sites at the moment that enable you to shop around. The biggest impediment is inertia, apathy on the part of their customers.
Graham Samuel, who once had Rod Sims' job, is watching with keen interest.
I don't envy him because he's going to have to do a detailed review, and then at the very end he's going to ask himself, is anyone going to take any notice?
The global financial crisis smashed the smaller lenders who were the prime competitors of the Big Four. But Graham Samuel says they're back and worth considering.
Following the GFC, they virtually disappeared. They had no capacity to raise money at a low enough cost. And so they disappeared from the scene. Now they've gradually rebuilt and re-energised, and of course they should borrow from them. If you can get a lower rate from borrowing from a non-bank financial institution, why wouldn't you do it? Their money is as good as any of the Big Four banks.
The ACCC probe may have value, but it's also populist and dripping in politics. Don't believe me? Here are the government's talking points accidentally released to the press gallery this morning. On page 3, it says banks have decided to put their profits before their customers. Important to remember amid all of this age-old bank bashing is that only about a third of households actually have mortgages. Another third own their homes outright, and the rest are renters. But despite being outnumbered, mortgagees are a powerful lot, always have been. Home ownership wrapped up in the great Australian dream. And banks, well, they've long been portrayed as the scoundrels.
Last week our interest rates changed from 12% to 63% to 42%.
Yes?
Why?
I'm the bank.
The days of double-digit interest rates are a generation ago, but household pressures now come in higher repayments from ever bigger mortgages.
The ACCC report will help us get a much better hold on the information.
We're also concerned that there's quite a gap between what new customers pay and customers who've been with the same bank for some time.
This is not a royal commission. This is not an inquiry into every single part of banking.
The banking sector is no stranger to scrutiny these days, and it says the inquiry will vindicate its pricing structures. Well, it's clear from what the Treasurer and Rod Sims are saying that they're concerned about what a loyal customer pays and what a new borrower pays. Do you concede that's a real gripe?
What I think the inquiry will be looking at in relation to long-term customers versus new mortgage customers is hopefully what customers are actually paying on their mortgage. And what I think it will find in that regard is that there are many customers paying less than the advertised rate because they've talked to their bank, they've negotiated a better deal.
Rod Sims' final report won't come down for another year, and markets say there's an even chance of another official rate cut next month. So who knows what mortgage rates will be by then. But with the inquiry underway, the government gets some political cover if banks don't pass on any future rate cuts. Of course, there's two sides to this. As official rates get ever closer to zero, savings accounts generate less interest. Peter Button knows it cuts both ways.
The money we've got through our super fund, we can't expect as much as what we would have got through that because the rates keep going down.
I look forward to a time when Australian banks can get on with the business of building the Australian economy without the degree of public scrutiny that they've been subjected to in the last couple of years.
She might be waiting for some time.
Hi, I'm Lee Sales. Thanks for watching this story. If you'd like to watch more of 7:30's stories, they are on the left of your screen. And tap on the button below to subscribe and get the latest from ABC News.